Harlan, are you there?
I am here. Wow, you just nailed it. You nailed exactly what I wanted to talk about today. Baba. When you mentioned Baba, how, and Apple too for that matter, and Google, and tons of other stocks, we had that face of fear lows, not yesterday, but the day before. And then we rolled over yesterday, and what did Baba do? You're right. It put in a higher low, while the market put in a lower low. I mean, I guess if you watch the S&P, rather.
Correct. So what
So
does,
that's
yeah, go ahead, Harlan.
I call that positive divergence. That's exactly what you want to see. The indexes, they were saying lower lows or a retest of the low when you look at the NASDAQ. But then you look at BABA and you're right. It didn't retest the lows in tandem with the market. That's divergence. That's a bit of positive divergence. Same thing with Apple, same thing with Google, a lot of these names. So that's a big positive.
Are you
So many
you
Other than
stocks.
looking to
that,
pick it up? Are you looking to pick it up? Are you waiting for it to get? Are you going to try and pick it up now and lean on that low? We had talked about it for a while yesterday. I love my 50% retracements. 101.40 was the 50% on that thing, and it went to 101.20. Did you happen to throw a stray bid out there?
yes.
All right,
In the face
Harlan.
of fear, that day. Well, we've been talking about BABA for what, 2, 3 weeks now? And
Yeah.
we always kept looking at that 50% level, the 50-day moving average, the 5 waves down. So, I mean, here you're getting, data points, bam, 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 bullet points that is information that you can use to tell you that, these are support levels. Not to mention, if you drew a line across 100, one could say that's where it broke out of. So you have multiple pieces of information telling you at that moment in time that, you know what, this is a support zone. So when we gapped down really hard on Tuesday, I traded what I see. I stuck to my guns, and we bought it, I think, 101.78. We bought a
Wow.
lot of stock that morning. When things were
Nice.
really scary,
Nice,
we bought a
Harlan.
lot.
Wow.
Same thing with Apple.
And where just your risk rewards, your stops, just kind of how you're managing the trade.
Well, with everything we do, we pay attention to trade size risk management, meaning we never put more than 5% of our overall portfolio in any one stock. So right from the start, you're managing your risk before you even take any
Nice.
trade. So, think about it. Theoretically speaking, what if we took an entry and we get stopped out at a 10% loss? Just theoretically speaking, you know what the impact to our account is? Half of 1%. Big
Nice.
deal. And if you're 30% invested, let's say, you have 6 issues, what is that? It's not even worth talking about. It's just a bad day. And that's getting stopped out at 10% losses. So, we use that as a guide to smooth out the volatility within our overall portfolio. Never bite off more than you can chew.
Aren't you tempted though sometimes to deviate from that? I mean, when like the stars align, that all those numbers coming together, aren't you like? Do you get a little itchy, or do you just really try and stick to your goals and your risk management parameters?
I stick to my guns. I really
Good for
do.
you.
And once in a while, you know what? I get a black eye like everybody else does, but I'll never end up in ICU. So, I mean, and
That's
that's,
a good
and
point.
that's the market. I mean, think about it. These guys that are taking 20, 30% positions of their overall portfolio in any one stock, you know what? Your highs are really high, but guess what? Your lows are really low. So, I mean, if you have a stock and you wake up and you got a 20% of your portfolio in any one stock, and what happens is bad news comes out overnight. Next thing you know, the stock gaps down, 10, 15, 20% on bad news. Wow, you're having a bad day. The flip side is, good news comes out, you're having a really good day. So it's really just about smoothing out the emotional extremes that we as traders all go through. Because the one thing that is the most detrimental to your success is your mental state of mind.
What about target on the upside here? Is this something where you're just going to move your stop up incrementally? I mean, if you bought it at 101.70 and what did it get up to? It got up in the upper 107s. I mean, that's a pretty big windfall. Did you try and take any profits? Are you just trying to be
Nope.
patient on it and move your stop up?
two things. I'm trying to be patient because what is the big picture overall pattern of this stock? It's in a clearly defined uptrend. And what is it doing? All it's been doing is pulling back off highs in a nice, orderly manner when you look at the chart on your screen. So from a daily perspective, remember, that's where I'm operating from. Now, that all being said, draw a line across your November, what is that, 115. Draw a line right across your tops. That would be a breakout of what we call a pullback off highs. And you know what yesterday's high just happened to be? That trend line resistance. So if you break out of resistance, you're breaking out. So you're breaking out of a pattern. Of course, follow through is key, which you never know. But here's the one thing you never know. When a stock starts making a move, you never know how far it's going to go. So you just adjust and you become patient and things like that to manage the trade. You can't manage your gains until you actually really have them to manage. But, what is it with this stock? Everybody loved it, all the way from 100, 105, 110, 115, and now nobody likes it. So I'm just more of these, hey, I buy support. I trade what I see, not what I think, not what I hear, not what I fear.
Another quote from Harlan.
He's always got the great quotes. Harlan, what are you eyeing now? So you got the BABA. You must be eyeing a couple other stocks there. What's on your radar?
Well, I am. When we were running up there and the S&P was putting in a double top and tagging resistance in that 2080-ish zone, everybody was we're never going down. The sky's the limit. And I'm like, it's just, I don't like chasing stocks. So I would rather have stocks pull back off their highs and clearly defined uptrends to either a support level, a moving average, something of that caliber. Look at NetEase, NTES.
NETS.
NTES, Joel's dyslexic.
Thank you, Dennis.
Nancy, Tom, Echo, Sam.
Okay,
There
there
it is.
you go. That's a Harlan chart. Put a big HARLAN right here on this one. Go ahead, Harlan.
Well, look at it. Early November, what did it do? It broke out of that small basing structure, base on base for some of you IBD types. 90 was a base to 95. There was a nice little trading range there, broke out into a high, ran up to like 107. And what did it do? On Tuesday, in the face of fear, it came down, tagged that 95, which is a support, and it immediately lifted right off of there with everything else. I mean, it was classic. Don't blink that morning. Of course, yesterday, what do you notice? It came up and it retested the downtrend line highs and, rolled over with the market. But what is right below 95? 94.11 is where the 50-day moving average is. And then you've got even good support below that at 90. So your risk is limited. You're buying an issue that's closer to support versus chasing it at 105, 106, thinking the sky's the limit. We don't chase buses.
Just
We
looking.
let them come to us.
Not to change the subject on you here, Harlan, but we've got oil is rolling over here right now. Off these 830 numbers, it started to show a little bit of weakness. We're really starting to roll over now. We've taken out the lows. We just bounced off 60.11. So we got close to the $60 level that we've been talking about here. 60.25 here right now as we're down another 70 cents. You're seeing crude weak here again. Where is the bottom in crude, Harlan? Is there a bottom?
Gosh, who knows? It's right now you're trying to catch a falling knife. I just have a few thoughts on it. First off, when you look at crude and you look at everything else in that space, shorting, guess what? You are very late to the party from a daily chart pattern perspective. Right. It's the equivalent of if you're trying to short here, you are starting to chase a bus. Now, by the same token, if you're looking to go long here, you're trying to catch a falling knife. The thing that bothers me about this is it's very crowded on the short side. That's about the time when it's never going higher. It's never going higher, right? This is the complacency again. And that's a scary point to be because, this is about the time where you can start to see short cover rallies come in that'll rip your face off. When everybody's leaning one way, I kind of want to step aside from that trade. So it's not something that I'd be interested in, anything in that area or space right here. I'm more interested in issues that are in clearly defined uptrends that are pulling back off highs versus off the face of a cliff, trying to figure out where's the low, where's the low.
Can I
It's
go a
just a
little?
matter of personal
Can I
preference.
can I go a little fundamental on you here?
Yeah, I'm a chartist though,
Okay, and well, Dennis,
but go ahead.
You can weigh on this too, as well as the chat. How come no one's talking about, well, cheaper oil, cheaper gas, more disposable income for the consumer? Where are they going to be spending that money, leading to what stocks are going to benefit from this? Is it going to
Mm,
be a better
well,
holiday season? Is it, should you be looking at some of these beaten up retailers, or is the money going to
Well, I
be
got a
spread
couple of.
around? Go ahead.
I get you. Well, we've seen the contra trade in the flip side of it in the airlines. Some of these airlines, they're a direct beneficiary. Well, how much of that is already built in? So, some of these airlines is like, we hear it all the time. Oh, geez, lower oil means, big savings for the airlines. Yeah, that's true. And, some of those stocks are already reflecting that. So the interesting part is, and we'll find out, when oil gets a dead cat bounce, short cover rally, whatever you want to call it, what happens to the airlines? That'll be an interesting thing to watch. The other side is, I was thinking about this. Yes, more money in the consumer's pockets. I mean, it is really cheap. The price at the pump is really cheap. It's getting so cheap. So here's the thought, though. Yes, I can see over the course of a monthly basis, it does save, more money in consumers' pockets. However, when you go put, let's say, $10 in gas in your pump, in your tank, how much are you really saving? About $1. Every time you put $10 in, what are you really saving because the price went down? Let's say $1 at the pump. So how much of that do you really, it's like, sure, I'm saving, but I'm saving in a few dollars here, a few dollars here.
Right.
Does it really matter? It's like, okay, I put $10, $15 in my tank, and guess what? I saved enough to go buy a cup of coffee at Starbucks in the drive-thru. But yes, I get it. Big picture over the course of a month, it adds up. But when it's trickling into you, does it really have a major impact? I mean, if you're driving a lot, yeah.
Yeah, there you go. There you go. Okay, all right. Maybe some of the bigger cars, the F-150s or things like that, might get a little pop on it too.
Could be. Anyone who drives a truck is going.
Yeah, that was I going to say.
SUV
Yep,
is going.
yep.
Yeah, I'm sure liking this. So that's just kind of a couple of views that I have on things. It'll be interesting to see as we go forward, but it's just, it's that time of the year. The market's in an uptrend. We got really overbought. Everybody got complacent on the upside, saying we're never going lower. Sky's the limit. And so, that's about the time. That's a common trait for a market that's ready to pull back. And remember, markets digest gains one of two ways. They either pull back via price, or they go sideways through time till moving averages and support levels catch up to them. So, it's that time of the year. We'll see. We'll see if this thing sticks today. It has been a very wild ride the last 2 days. Extremely.
What do you think on the S&P futures overall here? Because we've been rallying with the oil sell-off, and then yesterday they decided, no, we're going to sell off with the oil. And now you're seeing this market kind of, yesterday it followed the oil prices, which was interesting. That's the first time we've seen that, at least for a while, that the S&P futures are actually following the oil price. Now that the oil started drifting lower here again, do you think these S&P futures could potentially give back some of these gains it's got here today?
That's a good question. I honestly don't know. For me, I look at the S&P and I'm going, all right, where's support? When markets start pulling back, I'm always looking for levels of support where the market can, and here's Joel's favorite words, stabilize. And that's what we're looking for. And if we don't stabilize, where exactly is support? I mean, the 50-day moving average on the S&P, it's at 2,000. All right, that's one more bad day at the rate we went yesterday. So the 50-day moving average does tend to act as a support level from a chartist standpoint. We saw that with Apple. We saw that with BABA. We saw that with AMBA, Ambarella. So we've seen it with so many stocks that the 50-day tends to act as a support. So if you're buying the S&P in here, understand your fluctuation risk is it can come down to the 50-day moving average and everything can still be okay.
Okay, we have Harlan Pyan. He's the co-founder about All About Trends. All About Trends is a subscription-based newsletter service focusing on helping individuals secure consistent profits in the market by trading what they see, not what they think, hear, or fear. Well, Harlan, I'm going to be out next week, so Brianna's going to be taking the reins with Dennis. So talk to you in a couple weeks. Thanks for the great information, and have a good one.
You bet. Thanks, guys. See you later.
Thanks, Harlan.